Complexity creates confusion. Simplicity, focus. Edward de Bono. And Mr. de Bono is exactly right. That's what we do every day is we focus on simplicity, and the simplicity gives us focus. Focus on what? Price movement. That's all we care about. That is all we care about. Is price going up or down? Now, yes, it can also go sideways, but when we chart, when we focus on technical analysis, we are looking to determine price direction. And the first thing we look for are trends. We look for the biggest trend. That is the weekly vertical crossover. We've had two of them lately. This past Friday on the 1st of November, we had a crossover going up on the S&P 500. The prior Friday, we had a weekly vertical crossover on the 25th of October going up on the Qs. And again, we focus on those. We've also been tracking price movement with the prior vertical crossovers a while back on gold going down. That was back on the 27th of September. And then on 20-year bonds, that was also the 27th of September. And we pay close attention to those big trends. We're not looking to catch anomalies in the market inaccuracies, inefficiencies. Those are more and more being figured out by quant traders, computers, artificial intelligence, all those types of things. What we are looking for are established trends that move over time. Once they get established, we look for them and we look to jump into them. That's what the weekly vertical crossovers and the 2-day crossovers and the 4-hour crossovers are all about. Now, let's jump into these charts. We see stocks are mixed. S&P 500 down a little bit for the day. The Qs up a little bit. Bonds down and gold way down. So let's jump first into the S&P 500. We had that weekly vertical crossover, as we said, back on the 1st of November. We see this week starting off with a big green up candle down just a little bit for the day, 0.11%. Price percent oscillator still going up. Derivative oscillator still gaining upward momentum. 2 days in to the 5-day candle. We have completed the latest 2-day candle, and it's a nice big green up, open box up candle. Price percent oscillator still heading up. Derivative oscillator gaining upward momentum. Go to the 4-hour chart. We see where things peaked out on Monday morning. Again, after that jumping in point on Friday afternoon. Know that some of you jumped into a position on Friday. On your practice trade, you were in and out lickety-split there on Monday before the close of the day, locking in your profit there. We still, though, are watching. We still have a weekly vertical crossover in effect. Price movement still above the 2-day and the weekly. We see things as they slide sideways. Again, like we said, down just a little bit for the day. We'll continue to watch and see. Remember, once you enter a trade, until you hit your profit parameters, what you are looking for after that 4-hour chart perhaps sometimes pulls the trigger for you, you don't let that 4-hour chart mislead you. You want to pay close attention to what that 2-day chart is doing, still going up strong, and that weekly chart still going up strong and decent. So we'll continue to watch, see what there is to see, what there is to learn from this trade. Now, what about the Qs? Well, the Q's still going up strong on the weekly. Price percent oscillator heading up. Derivative oscillator gaining upward momentum. Go to that 2-day chart. We see it continuing to move up. That 2-day candle has now closed out, representing Monday and Tuesday. Nice up candle above the Bollinger Bands. Big green open box candle, little wick on top. Price percent oscillator going up. Derivative oscillator going up. 4-hour chart. See things, of course, moving a little bit higher, like we said, up 0.05%. That's not 0.5%, but 0.05%. So pretty much a sideways slide, little up on the Qs. We'll continue to watch that also, see what happens as the week progresses. We now leave stocks, go to bonds, which continue to fall. We've got another red down candle forming for the week, 2 days into it. Derivative oscillator still losing a little bit of downward momentum, but that all-important price percent oscillator clicking over, heading further down, prices below the weekly trend line. When we get to the 2-day, we'll see what we can do about that if it needs to be redrawn at this point, because we're seeing price just barely sitting on that. We'll continue to keep an eye on things. Go to the 2-day. At some point, we're going to need to redraw it, but we really just can't redraw it at this point because of that up candle 2 days prior. Just doesn't make for redrawing the trend line. So pay attention to where it is now and where price movement is going. We do see the price percent oscillator moving back over, going down. Derivative oscillator still losing downward momentum. That latest 2-day candle, strong down candle, red, no wick on top. Nice long wick on the bottom, plumbing down below the prior low, which is good to see. 4-hour chart. See a lot of down movement in the morning, not a whole lot, not anymore in the afternoon. We did have that crossover. How many of you were waiting for that and pulled the trigger on a practice trade if you were not still in? You really didn't have a lot of reason to get in. What have we told you to continue to watch for, though? Pushing down below that $137 mark, which things did plumb below that. Price percent oscillator did cross over in the morning. Jumping in point was around noon. We'll see how that continues to play out on bonds. Again, we said down 1.12%. Gold was the big downer for the day, down 1.62%. Gold had a weekly vertical crossover all the way back on the 27th of September and has gone down, but really down and sort of up, and it's mostly been sideways. And so far this week, we have a red spinning top, means indecision, tending down. We look at that price percent oscillator, it's kinked over, heading down further now, and the derivative oscillators also starting to gain some downward momentum, which is good to see. The prior 2 weeks, it had been losing downward momentum as we had green spinning tops. So we'll continue to keep an eye on gold. We see that 2-day chart ended up with a red spinning top. Again, a big wick on the bottom, fairly good size wick on top. Red, solid red down candle in the middle. We see the derivative oscillator, which had just on that prior 2-day candle popped green, has gone back to red. That's a good sign for more down movement. And the price percent oscillator moving away from the red signal line. We go to that 4-hour chart, and like we saw with gold, had a crossover and a jumping in point in the afternoon. How many of you were watching? We're talking about both of those yesterday. How many of you jumped in to a down play on gold? Again, want you to practice these things. Practice to show yourself approved. Doesn't cost anything, and you need to do it as much as you can when you would actually consider pulling the trigger. Now again, if you wouldn't in gold, didn't want to practice trade it, then don't do it. But it never hurts. It doesn't cost anything. And there's so much to learn from doing it. If you invest emotionally in doing it, when you feel like there is the potential of a trade there, do the same with the stocks that you follow and want to practice trade. Again, you've got to practice. If you're not practicing, you're not going to be learning any of the lessons from the things we do here. And guess what's in the show notes for all of you? Free PDFs for the daily market worksheet, weekly market worksheet, and that all-important trade worksheet. Hey guys, we have a special training for you today. Every indicator can fail, and we want you to have that training. How do you get it? Well, you subscribe at chartingwealth.com. Doesn't cost you a penny. Go there, put in your name, email address. That list is never spammed, and you will get every day the special trainings that we prepare for you. You'll also get the daily market review, and then once a week on Fridays at the close of the market, the comprehensive review and forecast. All that stuff's for free. If you want a compilation of everything we teach here, We've got it in our book, Charting Your Way to Wealth, 13th printing. We have a signed autographed copy for you. All you got to do is follow the link in the show notes. You'll see the links both at the website, chartingwealth.com, at our YouTube channel, Charting Wealth. And please, when you're there, subscribe. Click the bottom right of the screen. You'll get notices every time we put up new information, new training, daily and weekly reviews, all there for you. And don't forget Patreon members, we do have a new Patreon question and answer call-in session coming in. It's going to be this next week, next Wednesday. Watch your emails for updates and get those questions ready for that special training. If you want to be a Patreon member, there's time for you to join between now and next Wednesday. Again, follow the link in the show notes. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.